In today's video, we're diving into one of the biggest questions in the crypto world. How does the US Federal Reserve actually affect digital assets? Most people think crypto moves completely independently from traditional finance, but the truth is the relationship between the Federal Reserve and the crypto market is stronger than ever. And if you understand this connection, you can understand most of the major pumps and crashes we see in Bitcoin, Ethereum, and even smaller altcoins. So let's break it down simply. First, the Federal Reserve is basically the heartbeat of global liquidity. When the Fed lowers interest rates, money becomes cheaper to borrow. Investors start looking for higher return opportunities, and that usually pushes them toward riskier assets, like cryptocurrencies. That's why whenever the Fed signals easier policy, you'll often see strong inflows into Bitcoin and Ethereum. On the other hand, when the Fed raises interest rates, investors become more defensive. Money gets more expensive, people prefer safer assets, and the crypto market tends to cool down or correct. It's not a perfect one-to-one relationship, but historically, Fed tightening cycles almost always bring volatility to crypto. But it's not just interest rates. The second big factor is liquidity. When the Fed injects liquidity into the financial system through bond buying or emergency programs, risk assets usually explode in value. Crypto benefits massively from these liquidity waves because it's global, fast, and highly speculative. That's why many of the strongest bull markets align with periods of high liquidity. If liquidity dries up, confidence drops, leverage unwinds, and suddenly the crypto market becomes extremely sensitive to any negative news. Now let's talk about something becoming extremely important: regulation and stablecoins. Over the past couple of years, the US government and regulators have been pushing for clearer rules around stablecoins, because stablecoins act like the bridge between traditional finance and digital finance. If the rules become clear and banks start supporting regulated stablecoins, that means more institutional adoption, more liquidity, and more trust entering crypto. But it also means crypto becomes more connected to the traditional financial system. And that connection makes the Federal Reserve even more influential over the entire industry. At the same time, US regulators have begun allowing certain crypto companies to operate more like traditional financial institutions, which means custody services, crypto-backed payment rails, and bank-level protection are slowly entering the space. This is great for long-term maturity of the market, but it also means that crypto is no longer an isolated world. The more the industry connects to banks, the more central bank policy matters. So what does all of this mean for you as a crypto investor or trader? It means you can't just look at charts anymore. You need to understand the macro environment. If the Fed signals lower interest rates, easier liquidity, or a pause in tightening, that's usually a supportive signal for crypto. If the Fed warns about inflation, signals more rate hikes, or pulls liquidity from the market, that's usually a warning sign for risk assets, including Bitcoin. You don't have to be an economist. You just need to understand the direction of the policy. Think of it like this. The Federal Reserve controls the water level, and crypto is one of the boats floating on top. When the water rises, all boats rise. When the water falls, everything sinks. And here's the key takeaway. Crypto is evolving. The industry is moving from a wild, unregulated world into a more structured and interconnected financial system. That means the Fed's influence will only grow over time. Whether you're a trader, investor, or just someone who loves the space, understanding the Federal Reserve gives you an edge, because when everyone else is reacting emotionally to price moves, you'll know exactly why the market is moving and what might come next. If you enjoyed this breakdown, make sure you like, subscribe, and let me know in the comments. Do you think the Federal Reserve is helping crypto grow or holding it back? Let's talk about it.